Marhaba, and welcome to this afternoon's Fireside Chat on building sustainable ecosystems. I am Brandy Scott from the Business Breakfast, but the woman who you really want to hear today is right next to me. Fresh off a plane, Courtney Powell is the Chief Operating Officer and Managing Partner of 500 Global, the Silicon Valley-based startup venture capital firm. And we have her this morning for exactly 19 and a half minutes. So I am not going to waste a moment more with her CV. It's why we all have Google and LinkedIn. Instead, I'm going to dive straight in by asking her where she thinks, as someone who's been investing in this region for more than a decade, we are in terms of building our startup ecosystem. To a Silicon Valley player, Courtney, what do we look like?
Yes, so first of all, wonderful to be here with everybody today. I think maybe setting a little bit of context for how we at 500 think about investing around the world and why it's been so core to our ethos now for over a decade. We started in 2011, and at that time, investing even outside of Menlo Park was really quite a bizarre thing to do. So when we moved our office to San Francisco, people thought we were nuts. So you can imagine when all of a sudden we decided we wanted to start investing globally. We started first investing in Latin America and ultimately into Southeast Asia, and then in 2012 made our first investment here in the Middle East into a Jordanian company. Since then, we've seen the ecosystem grow enormously. And the way we think about how an ecosystem is categorized in terms of health is really thinking about whether it's in a nascent phase of startup development, a more emerging stage of startup development, or an advanced stage. So when we look at the Middle East as a whole, we largely categorize it as emerging, although there are slight differences varied by country.
When we look at the UAE, though, where would you place us on that map?
Yes, so UAE is a fantastic example of what we would consider an emerging startup ecosystem. When we launched our first fund here, investing in the UAE in 2018, it was possible for us to make a very significant number of investments. We deployed about $33 million across 180 companies across the region. About 70 of those were based here in the UAE. And if you look at that portfolio today, we have over 14 companies out of that original fund valued at over $100 million. This is a great sign for the growth that we've seen in the ecosystem in the UAE and across the region in just a relatively short amount of time.
We don't like to rest on our laurels, though. So what is going to move the ecosystem here up from emerging and up through those stages? What are the gaps that need to be filled?
Yes, so there's a few different KPIs, if you will, that we look at when we are trying to understand the health of an ecosystem. One of the most important, in fact, what I would say is the most important KPI for the health of a startup ecosystem is the number of new startups being created every single year. The reason this is important is because it's really critical to be able to build a very strong, wide pipeline of companies, so you actually begin to see those companies who are going to become unicorns and ultimately exit and create a nice financial return and ecosystem return, as we call it. Thank you very much. For us, we want to see more and more new startups created that are coming from the UAE. Now, the way to be able to do that is exactly what is starting to happen, I think, very broadly here, which is not just encouraging the incredible local population of entrepreneurs to launch companies, but also opening up the UAE as a global market and a global hub of entrepreneurship that's bringing talent in from all over.
When you look at the space here, we have set up incubators, we have populated funds, we've got no shortage of very funky co-working spaces with really good coffee. How do you build the culture, though, that intangible something?
Yeah, I think this is a wonderful question because, as you said, certainly having incredible spaces and programs make a difference, but ultimately you need to see winners. You need to see, businesses that exit, that create their own mafias of talent that then go and start other companies. Obviously, Kareem has been an incredible example of that in the region. We expect many more IPOs to come over the next several years. It's something we're watching very closely. And a part of being able to have those exits, as I said, talent is critical. You need to have the regulatory framework in place to be able to easily start companies, easily launch fintech companies, for example, and to be able to take companies public in a way that makes the ADX or the other exchanges, very compelling for companies.
Is that how we measure success, on the availability of an exit?
Yeah, I mean, I think ultimately that's what you want to see, right? Because what's happening once you have companies actually exiting and you're creating more liquidity across the talent pool that was involved, the investors that were involved, then it's going to create a cycle where people want to see more and more, innovation come, and they want to start their own companies. So this awareness, really, of entrepreneurship as even a career path is still relatively new. I think most of our parents might have wanted us to be doctors or lawyers or engineers. This idea of being a startup founder is still something that is catching on really worldwide.
What about the education system as part of that ecosystem? I mean, I was in Menlo Park a month ago, and one of the VCs that I spoke to spoke about the fact that the universities and colleges in the area were effectively geared to the local industry, if you like, the local mine. How important is that?
Yeah, I mean, I think the education aspect of things is critical, but it's not really even just at the college level, right? I think now in the US and in other markets, you're starting to see design thinking taught really at the elementary school age. You're starting to see incubators and accelerators taking place for high schoolers. So by the time they're getting to the universities, there's already quite a bit of exposure in advanced markets for entrepreneurship. That's certainly something that we want to see replicated worldwide, and I think there's such an incredible education system here in the UAE already, and certainly I can see more and more of that being incorporated.
Well, the other thing that VCs were speaking to me about was the theory that at the moment we're in a funding winter, or a funding desert, as some put it. How would you characterize it at the moment, and why are we where we are in terms of the availability of funds?
Yeah, I mean, venture as an asset class is still a relatively new development. And so I think what you're seeing right now is a bit of a reset on, allocators trying to determine really, how aggressive they're going to continue to be by investing in fund managers. Fortunately, or unfortunately, depending how you look at it, there was a lot of capital raised by VC funds over the last few years. So there's still a lot of dry powder, as we call it, that needs to be deployed here and elsewhere. But you are starting to see a decrease in funding and the sizes of rounds and the number of rounds really across every stage. We first saw that at the later stages, Series B, C, and beyond, but now we actually are starting to see that in the earlier stage as well. But for 500, we still invest in about, we do one deal a day, essentially, for the last several years. We're managing $3 billion in assets under management. So there's going to be plenty of players who are still deploying in this region and beyond. But broadly speaking, I do think we are going to see less capital deployed this year than in certainly the previous.
What's going to reverse that? Is it time? Is it wider economic factors?
Yeah, I mean, I think everybody is still, somewhat concerned about the broader economic environment that we're in. So I think until we get to the point that people feel that the interest rates have stabilized, that things just more broadly from a geopolitical standpoint have stabilized, then I think there's going to be a little bit of fear, about the markets. But in the same breath, people who have raised funds need to be able to deploy those funds. LPs need to be able to deploy those funds, and incredible founders who start great businesses will continue to raise.
Are they looking for different criteria now for how they deploy them, though? Is it getting tougher to attract that money?
I do believe it is tougher to attract the money today, in the sense that there was a widespread belief coming off the last decade of startups that you should be able to pay for growth and eventually you would hit profitability. Now, the best investors are not going to become so extreme that they're expecting immediate profitability, because we need really major outcomes to be able to return our funds. But I do think there's going to be a much broader awareness of having some plan for unit economics or some sustainability for the business in a reasonable amount of time.
Where's the opportunity for this region and all of that? I mean, the last month has seen, obviously, the SVB collapse. It's raised a question about where startups can get the banking support that they need. Is there an opportunity for this region in that?
I'm more excited about the Middle East than I ever have been. And we have been on the ground investing here. We've had an accelerator program in the region since 2018. So I think we've been a very strong part of the ecosystem as it's developed. However, I think now with the amount of liquidity that still exists here, really the government support that we're seeing in the UAE and Saudi and Egypt and elsewhere, all bode very well for the future of this ecosystem. And I think for the first time, it's also starting to get real global attention. And we want to see global investors, global talent coming, and more importantly, we want to see MENA-based startups expanding globally. So I think it's really, we're entering a golden age for startups in the Middle East.
Well, let's talk a little bit more about that, because you guys have been ranked as the world's most active investors. What did you say there, a deal a day?
Yes, it varies year to year, but roughly speaking, yes, about a deal a day.
Give us an idea of the volume that you're talking about. How many applications would you get a day?
Oh, geez. I mean, tens of thousands a year across our platform for sure. If my LinkedIn is any representation, I don't know, hundreds just personally, probably within a day. So yes, no slowdown in the amount of applications that we're seeing for our programs and for our funds. But I think, really, we want to see even more startups, especially within the Middle East, being created. So we're really excited to see some of these companies grow bigger and create, more and more talent networks, and then, launch their own companies.
What percentage of the applications that you get would be viable, though, would be real contenders?
Sure. So if you look at 500 or YC, for example, we're only going to invest in the top 1% to 2% of all of the applications that we're receiving. And just so everybody understands just how difficult venture math is, we're accepting 1% to 2% of those applications, and then roughly 2% to 4% of those who we're investing in go on to become unicorns, which means you have to have a substantial pipeline of startups being created every year to see the sort of exits and impact to an ecosystem that one would expect.
So what makes it through your inbox initially? What's the X factor to get someone looked at seriously at that first hurdle?
Yeah, I mean, certainly there's an element of something that stands out is anytime you have a subject matter expert paired with a technical expert, I think is always really excited, especially if they're one and the same. Teams that have worked together before, always really interesting because then you kind of mitigate some of the risk of an early team coming together. But more than anything, I think we really like to see speed. We want to see companies that are iterating very quickly, not falling in love with their product, but rather falling in love with the problem that they're trying to solve and being responsive and agile to, those early customers so they get it right.
And what about at the pitch stage? Are we still talking pitch decks? Where are we?
Yeah, so I mean, certainly pitch decks are still in vogue, although now we've seen them evolve a little bit. People will send you DocSend links or Notion links, but generally speaking, having a great short pitch deck to be able to share with an investor is the right way to go.
And what about the other side of this coin? I mean, I know, and I want to get the wording for this now, that you're training up VC fund managers and angel investors. You've got a big event in Saudi this month. Tell us why that's necessary.
Yes, so 500 takes a bit of a broader approach, if you will, to VC. I mean, we're financial investors first and foremost, but because we're investing in nascent and emerging markets, we don't just deploy capital. We come in and we work closely with governments to identify gaps that exist within an ecosystem and try to work together to use our expertise from our track record and our success over the last 12 plus years and contribute to that ecosystem. So oftentimes what we see in nascent and emerging markets is there may be new fund to funds, new government programs who are bringing more venture capital to the market, but we also at the same time really want to see local fund managers who have global best practices in mind, because we want to be co-investing with people who are really going to be a strong support, for our shared portfolios. So we've trained over 1,000 emerging fund managers around the world, worked very closely with governments around the world, not just to train fund managers, but also angel investors, family offices, and we work very heavily on the policy side as well to ensure that there's going to be, clear frameworks for new startups to be able to launch, to be able to bring talent. So there's adequate sandboxes to exist. It really takes a village of all stakeholders to see an ecosystem thrive.
So what kind of investors do you have signed up for your Saudi summit? Give me an idea of who they are.
Yeah, so the program is called Venture Capital Unlocked, and we run this program all over the world. So we partner with Stanford and run the program at Stanford in Palo Alto. We have had programs in Saudi Arabia, as you mentioned, in Paris, really all over. And really what we're looking for at the venture stage is relatively new managers. So those who are looking to work on a fund or are already working on a fund, who have been referred to us through other credible players in the market. And we spend time with them in person to really understand the technicality of running a firm, the best practices of running a firm, and making sure that they're going to be additive to the companies that they're investing in. It's developed into an incredible network of emerging fund managers that have gone on to run and create very large and significant funds worldwide. And we've trained over 70 professionals just in the Middle East. So we're really excited about this program and hope to bring it to the UAE as well.
So give us an idea, before we let you go, we've just got a couple of minutes left on the clock, of what you're looking for right now in the startup space. What's exciting you?
Well, certainly, we're at a fintech conference. We're the most active fintech investor in the world. We have the most fintech exits in the world, so we're going to continue to double down on fintech, and we want to see everything exciting across financial inclusion. I think there's a lot in the B2B fintech space that hasn't necessarily been explored yet. We're still very bullish on crypto as well, and so really looking to understand how digital assets are going to play into a broader, more regulated framework. Certainly AI is taking the world by storm, and we've had the benefit of having invested in a number of incredible companies there. Personally, I'm very driven by edtech. I think education is just such a critical part to nascent and emerging markets, and I really think there's a lot of exciting companies that we're going to see come from there as well.
When you're talking AI, are you talking generative AI, and how do you make sure that you're putting money towards the right things? I understand there's quite a lot of excitement throwing money at generative AI, but there's a question about some of the payoff.
Yeah, I think the way that I tend to think about it, if you recall in the early days of 90s, early 2000s, and people thought of investing in the web and what sort of web investing they were doing. And then mobile came along and they said, okay, well, what type of mobile investing are you doing? To me, this is the same that we're seeing happening with AI right now. AI will become insidious into every part of the digital atmosphere. And so when we think about AI, we're not necessarily looking at any one particular sector. We're seeing how it's being employed across every possible sector that we're investing in.
What do you make of some of the fear around the generative AI space, some of the rhetoric that we've seen recently?
I think as a society, we've become a little bit more aware of the power of technology because of what we've seen over the past 20 years. So I think it's healthy to have some sense that there needs to be some regulatory framework that does not prevent innovation, but at the same time helps us to feel safe that we are going to have a positive benefit to society. So I think a healthy bit of skepticism and fear is warranted, but at the same time, I would hate to see any sort of innovation stifled. And one of the incredible things we can do, especially with governments like we have here in the UAE and elsewhere that are willing to lean in and work with you on what those policy frameworks should look like, I think it's an incredible opportunity to really build a framework that's going to help AI and other companies thrive.
And last minute, how do we regulate that? How do you put those guardrails in place without, as you say, stifling innovation? Where's the sweet spot?
Yeah, I mean, I think one of the things that's most important is making sure that as we have stakeholders listening to what is needed, that they're really hearing firsthand from technical experts and startups, even investors who are heavily involved in the space. I think hearing from practitioners to understand what the impact of changes is going to mean is really important. And there, I think that there's incredible work that we've done and seen with consulting firms, but it's really important to hear firsthand from practitioners as to how we can make sure our regulatory frameworks are going to help solve the issues.
Well, that's us with 13 seconds left on the clock. They are fast and furious today. Courtney Powell is the Chief Operating Officer and Managing Partner at 500 Global, the Silicon Valley Startup Venture Capital Fund. Thank you so much for coming.